Hello, everyone. I wanted to get out another short introductory video about another popular topic in law, which is the RICO Act of 1970, the Racketeer Influenced and Corrupt Organizations Act, which is probably the most misunderstood law in the United States at any level of law. It is also one of the three most important pieces of legislation in America, other than the Constitution, those three being the Glass-Steagall Act, or the Banking Act of 1933, the RICO of 1970, and then the Community Reinvestment Act of 1977, which don't seem to um, relate to each other, but in fact they are very strongly integrated, and they're used daily at the docks in investment banking, at high level investment banking. So and I'll go into a little bit how they relate in a moment. So the two what makes the RICO Act so misunderstood is a lot of people don't understand what rackets are, what racketeering is. So the racketeering is defined in the simple explanation is organized crime. The textbook definition there's two components to it. The first part is pattern, that it has happened more than once, and enterprise, meaning it is being conducted for personal gain. So those are the two criteria that you look at when examining behavior to determine if it might meet the requirement for racketeering. What the racketeer seeks to do is to put their thumb on the scales of justice in their favor, generally in their neighborhood or in their area that they operate. The most common form of racketeering, or the most common racket, is loan sharking, where the loan shark will extend high interest loans to people who can't afford to repay them, and create a what we call an economic confinement situation, where those people can't escape their debt. Or they're known as a antlion trap, or a Bates Motel in fraud. So that it's an ongoing enterprise to get or receive revenue. So that meets the pattern. All right, so that economic confinement situation is where the RICO Act ties into the Community Reinvestment Act. The Community Reinvestment Act requires savings banks to make certain that there is sufficient economic opportunity to repay loans within the area that they're chartered in. So, and otherwise it's going to be predatory lending, the same as loan sharking. So the banks, banking officials, are required to contribute or make sure that the corporations in an area contribute to the economic well-being of the communities that they're in, to make sure that people, the Community Reinvestment Act ideally is you're supposed to be able to sell your home in, say, Seattle and move to Florida and be able to buy a comparable home and have the same economic opportunity to repay that loan, the mortgage, doing meaningful work in that community. So the three anvils of the RICO Act hammer are the teaching without state certification, which is materials that contradict U.S. Department of Education textbook guidelines and classroom materials guidelines, which are your cult leader type rackets, Bhagwan Sri Rajneesh, Jim Jones type racketeering. And then the second is the Community Reinvestment Act violations. And the third is straight up jury tampering or witness tampering. So that is you're taking actions to prevent or delay an indictment for the crime of racketeering. So, that's generally, the mafia guys stand outside on the sidewalk with the $1,000 suits on and the pinky rings, and they're intimidating people, potential witnesses and jurors from coming forth and complaining under threat of retaliation for them and their families. So that those three anvils are what RICO cases are going to fall under. All right, so it is popularly believed that the $250,000 insurance, FDIC insurance level at savings banking, that money above that, uninsured money, securities and that sort of thing, is kind of at the up to the invisible hand of the marketplace, which is not accurate. The above savings banking is investment banking, and investment banking is always under the jurisdiction of federal criminal law. So if you're going to become, or you're going to get, in fact, it is said, and which is very accurate, that maritime safety and the customer service counter are the limiting factors in investment banking. So what in a racket you're trying to do is short circuit that customer feedback system to your advantage. That's what's meant by putting the thumb on the scale. You're trying to short circuit the customer feedback system and push a product that you've ended up with that maybe people don't want. So that is important to understand, that if you're going to get involved in international shipping and investment banking, which are basically interchangeable, that you're going to need to understand how racketeering works, because you're going to be prosecuting your own investigations. You're the only one who understands or will be able to recognize racketeering in your industry. So, as a definitely as a attorney, if you want to get involved in investment banking, you're going to want to understand how racketeering works a little bit, and then at least well enough to recognize it. And so it's can be defined as aggravated fraud, right? So it's fraud with some leaning involved. There's some threat implied for non-compliance. So, and from a law enforcement perspective, you're gonna it's very important that law departments like that, even outside big cities, that you have a balanced attack in between your patrol divisions and your plainclothes people, who are the ones who will, they got their thumb on the pulse of what's happening in the business world, to be able to recognize those higher, bigger crimes, which will affect the smaller, will trickle down into economic opportunity or lack thereof on the streets. So racketeering is very dangerous because it's so insidious, and there's so few people who can recognize it and see that it's going on. All right, so I will leave you at that. I won't belabor this too much in the introduction. And if you, the RICO Act itself is in Title 18, Chapter 96. And then you can find that anywhere. Cornell Law has a the entire U.S. Code service online. So